Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. It is the 12th of the 7th, 2023, and we have got a lot to cover as always. We're going to start things off by looking at the main event of the day, which of course is going to be the US CPI. Now, expectations for this are coming in at around about 3.2, 3.1, which is very much in line with what we've been continuing to echo in regards to looking at true inflationary stats and the deflation that we're seeing take place across the board. Now, this is a key metric because inflation has been the main driver of the Federal Reserve and other central banks around the world, which of course we know have gone on an interest rate hiking crusade in the name of fighting inflation. Now, regardless of the fact that we continue to see a downtrending, a trending down inflation, and we have significantly higher interest rates than we have inflation, they are still set to do, according to the Fed Watch, another hike in around about 14 days. I think it's the 26th of the month of a 25 basis points. Now, why would they do this if you have trending down inflation? You now have, for the first time, a miss on the job market's data, the non-farm payroll, after 14 straight months of exceptionally strong and overly strong job data, which the Fed has used to back them. It's very interesting how the narrative, their data changes to fit whatever narrative they're trying to push. But we will cover all of this. We're going to be looking at it. Of course, the main event today, we're going to be looking at deflation in a number of different areas like UK PPI, Brazilian inflation, and then we'll bring things into the crypto space. Of course, we will look at the charts, the crypto charts, the dollar chart, which is going to be key today. Actually, even though inflation is going to be coming down and this kind of can certainly be deemed as something that has downward pressure on the dollar because essentially the dollar's been moved by interest rates, which cause a surge in demand for the dollars, higher interest on the debt, and more dollars are needed, blah, 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 and it's not just for US internally, but across the board. The dollar is at support. So it's very interesting. Dollar's at a key level. I think we looked at Francis Hunt's calls on the dollar to the downside. This very much aligns with everything that we're talking about on the channel. And then we'll finish things off really with a clip of, or a interview of, the former chair of the SEC, Jay Clayton, who we're very familiar with on this channel, actually coming out and somewhat bashing and not necessarily criticizing, but perhaps disagreeing with Gensler and what he's doing. I think regulations have huge repercussions for this industry, and I actually think they're more positive than negative. We've seen the negative effects, but ultimately we will get the positive, certainly when all this blows over. And you can see that really being the narrative that propels things. And this is, by that time, all the bears would have gone, oh, okay, there'll be undercover bulls at that point. But let's get into it, guys. We've mentioned a lot of things, and let's, of course, as always, start things off with a nice, lovely Bitcoin chart. This is what we have set out for Bitcoin. You guys will know that we entered the cryptocurrency markets back on the 5th of January, and what a call that was. We were literally one of the only channels to call this, and ultimately we've remained bullish since. Now, for certain altcoins, they have gone on and put in marginally lower lows. We actually think there's a bullish, there's alpha in this, because of the essence of the lows, the marginally lower lows with the divergence showing up. It's kind of like where Bitcoin was back here. And the RSI was one of the things that we looked at in regards to looking at this trend more broadly and looking at market structure that allowed us to sort of analyze and look at, where are we in relation to the trend, and is it time to potentially enter a position having sold, looking for lower prices. And that's, of course, what we've done. Altcoins a little bit sticky, but we do think they are going to overperform Bitcoin eventually. And ultimately, we have more money in altcoins at this point than we do Bitcoin. And some people may think that's crazy. It's not the traditional kind of crypto investing stance, but we will see. Have to admit, I was a little bit, I guess, for me, I'm very confident that altcoins like layer ones, certain altcoins out there, layer zeros, do very, very well and outperform Bitcoin in the long term, and will make you more money. But that's just my own take. Some of you may disagree with that, and I think that's absolutely fine. Today, of course, we have the CPI prints, which is coming out at 1:30, so half an hour after this video. And ultimately, the expectations for this, 4 was the last print, and they're now looking at 3.1 to 3.2. You guys know that we've been following true inflationary stats as one metric. We've also been looking at individual statistics, and actually we are seeing deflation across the board. This is UK PPI. This is from David Bell, someone who you guys will know that I'm familiar with. We've had him on the show a number of times. You can see a big tick down in the producer price index. So this is extremely interesting. Sort of hints at deflation. You're seeing it across the board in Spain, for example. You're seeing it Brazilian inflation year on year. You know, you've had a lot of volatility with inflation. Inflation was transitory given a long enough time period. And ultimately, this is looking at China. We'll probably do a comment on liquidity. We've got a great chart for liquidity, certainly for the US, that I've not seen anybody else talk about. This is adding a number of different central bank instruments together, and you can see the market correlation. We know the M2 is getting smashed. We've seen a lot of bears use this as a kind of call to, and it is certainly a playing factor as a call to get out, but I think bears are very desperate at this point, trying to find reasons why 2008 happens now. We do think 2008 will come again with a different context, but we don't think it's until the yield curve's uninverted, and we think there's a potentially the opportunity for new all-time highs for the stock market, which when we initially said it sounded crazy, but if you look at Apple, if you look at Microsoft, you are not only there, but you've taken your highs and you're now looking for price discovery, and we think the S&P is actually destined for new all-time highs. We've also looked at the context of sideways rates. Guys, there's no other channels out there doing all of this analysis on a daily basis. There really isn't. You know, this is where rates go sideways. This is what happens to the markets typically. So we expect this period to come. Okay, with this inflationary data, you would expect the Fed to perhaps pivot, because you'd say, okay, it's not really needed. You've already got rates where they are. But the Fed are, they have to, you know, beat their chest a bit. And actually there's a sort of currency FX play with the Fed doing interest rates. Certainly if other banks are also doing them, central banks. And right now, despite the lower inflation, despite the weakening job data, despite the fact that they skipped the last one, they want to do one now. And the market's currently pricing in 92.4%. And I doubt this will move much, even with the lower CPI print, which we're pretty much destined to get. I doubt this will move much in regards to them not doing a hike. So it looks like perhaps they do want to do a hike. The fact that this has stayed this stubbornly, despite all the sort of corresponding feedback that we've got, kind of indicates to me that there's a lot of inside knowledge, and that the Fed is kind of portraying that it's going to do another hike. I think it would be a good shock for the markets if they didn't, but right now they're expecting them. Good and bad news with this is it kind of shows that they're done, you know, and there's no reason to continue to hike more. You know, these kind of rates, a lot of stress in the system. Quantitative tightening at a certain point becomes counterintuitive because of the amount of debt that's out there. You think about the money and the stimulus that has to come to facilitate and print and continue to. Debt ceiling was a perfect example of this. Service that debt, at one point it becomes kind of counterintuitive. So there is a big macro take on everything going on, relating it to the markets. Bitcoin, ultimately, you guys know that we think has a plan. Altcoins, we actually think look great where they are. That's my honest opinion. I think there's a lot of divergences across the board. They've had a big blow off, washout, sorry. Not only have they had a washout, the momentum on this last washout caused by the SEC for some altcoins, not all of them, had a lot less sort of potency to it than the prior one, which shows to me that this trend is very, basically the bottom for your altcoins here. And we've stood by that call, certainly by January, and we're going to continue to do so. So it's going to be interesting. The FX market, of course, is going to be the one to watch with the CPI, because it's going to directly affect the dollar. Dollar's an interesting one because it's currently at support. Loses this, you know, it's going down, but you don't want to, you know, even though we might get the low CPI print, which might sort of cancel out a little bit of the need for further hikes, further dollar demand, you still could see some sort of an uptick, and it could be sort of, maybe you have a bit of a complexity in this head and shoulders. Maybe it is a head and shoulders, maybe it's not. If this was a head and shoulders, you're coming all the way back down here. Maybe it doesn't get as far, but we do still expect downside for the dollar. Gold's interesting. We think gold's obviously going to new all-time highs. It's there as well, along with the stock market. Everything is aligning. We've looked at Bitcoin cross-market analysis with it. You know, we have a very clear picture of what we think is happening and been largely spot on with what we've been saying. But this is essentially what's going on. And moving on now to some more internal crypto things. Now that we've covered the markets generally, the events, everything that's taking place, we know that right now there's a kind of regulatory crusade against the crypto space. Yesterday, we had Jay Clayton come out and say things such as, we have institutions that know markets better than anybody, and they are putting their names and reputations behind Bitcoin. This is the former SEC chairman. So what I want to do is play a quick clip of him talking about this, and then I'm going to love and leave you.
SEC chairman. So we were talking off camera about, I am accused of negligence at home a lot, and I don't try it. I'm just not always smart enough to know what I should be doing, right? Is that I mean, there's a rule now being proposed for the SEC. Doesn't have to be gross negligence. It's almost anything could be construed as negligence in terms of lawsuits.
Yeah, look, I think a mandatory negligence standard in the context of investing, which is inherently uncertain. It's about the future. We can't predict the future.
And if you're going for high returns, there's going to be losses from time to time that might not be from negligence.
And a legal standard like strict liability, negligence, gross negligence, recklessness, those standards are judged with hindsight. And so you have a negligence standard with something that's forward-looking. It doesn't make a lot of sense. It also, from what I would say is not just from a substantive point of view, but from a legal point of view, imposing contract terms on private parties, that's a pretty big step. You know, parties who can freely negotiate. What I think is a better way to approach the investor and the manager is ensuring alignment of interest. What are we doing to ensure that there's alignment of interest, that people have the same sort of skin in the game? That's a much better way to deal with these issues. Yeah,
don't hold your breath. That's not going to happen anytime soon. And either party, depending on who's in office, could certainly accuse the other party when they're in office of gross negligence. Look, you don't think Republicans are talking about what's happening now as gross negligence in the economy?
I think that's exactly the point, Joe, which is that in how you manage an investment, how you manage the economy, when there are so many factors at play, with hindsight, you're always going to be viewed as not having done the best job you could.
Have you watched with interest as blue chip firms have?
Very interesting what he says now. So the SEC is proposing a number of rules for, very interesting at a time when you've got all these funds apply for Bitcoin ETFs, that they are apply forward-looking negligence rules, which doesn't make sense, like Jay Clayton said, because negligence is typically viewed after the fact. I think the SEC is doing just a horrific job, not just crypto-related, but generally. We've seen this be brought up time and time again in front of Congress, not even in relation to crypto, in regards to the responses that they've given to Congress. Across the board, it's a real shambles, and the SEC are very much responsible for so many people from an investment point of view. And the markets largely, they're the Securities and Exchange Commission. The majority of things traded are securities. And for them to be doing such a horrific job under Gensler, who is trying to become Yellen and take her position, I think is amazing. But let's listen to what's said next, and then I'm going to love and leave you.
Decided that they want to get involved with Bitcoin or crypto?
Well, give me a minute. It's a fascinating etymology. Let's go back to like 2015, 16. This is an offshore, retail, nothing close to what I would say the core of our financial markets. At that time, if you look at trading of Bitcoin, the emergence of Bitcoin, it looked like stocks, but it was nothing like it. Now we've seen a development all the way to the point where companies whose reputation in the market matters are saying, you know what, we think that trading, we think that the custody, we think that those protections around this market are sufficient that we're willing to put our name on it and offer that product. That's actually an incredible development, not one that I expected. I was very skeptical of trading in the Bitcoin market when I was SEC chair. I thought, there were studies that 90% of it was wash trading, ripe for manipulation and the like, large people dumping. The fact that we have these institutions that know markets better than anybody and are saying, we're going to put our reputation behind it, I find that pretty remarkable.
Remarkable indeed. Here we are, ladies and gentlemen. I've been in the crypto space for long enough to appreciate what Jay Clayton's saying there. And yeah, that's really all we've got for you guys. Hopefully you've enjoyed this update. If you have a like, is always massively appreciated. So is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Don't forget to subscribe. Pleasure as always. It's glad to be back. Let's prepare for the next few days. And of course, by the time many of you are watching this video, the CPI will already be out and you'll be able to see the market's reaction. Now, everyone's expecting a lower print. Could that see a bit of resistance? With an actual lower print, it might become slightly above expectations. We will see. Dollar at support, going to be very interesting. I'm going to love and leave you on that note. Have a wonderful Wednesday, guys. See you in the next one.